ECB and Euro in the middle of war. Hello, it's me Ahura with another weekly outlook. The week ahead will be very important for the most economies with more important data to come. However, it will be much more important for European with ongoing war between Russia and Ukraine, its effects and ECB to decide what to do. Choose to higher inflation or stagflation. Anyway, what happens in the market and with economic data, investors will be focusing mostly on the war news and its different scenarios to end or to continue. Number 1. War and global activities. Why it happened, how it will end, or who is right is the political matter which is out of our scope of activity. But whatever happens there directly affects the global economy. Continuing war will increase the market risk, with lifting the prices of many raw materials, including the energy prices, which will end with the higher inflation. At the same time, it will decrease the economic improvements also, especially in Europe. For the week ahead, it will be the most important market mover, and for any direction in the stock markets, it will be the game changer. Number 2. Chinese trade balance. China is the biggest global factor, therefore its trade balance can give us more data about the global economy and not just about the China. Increasing imports, especially in the raw materials and energy sector, means that the factories in China got more orders for the coming months, and higher exports also will tell us what and which economies will have more retail sales. February trade balance for China is expected to increase to 99.50 billion from 94.46 billion in January. Number 3. Eurozone GDP. Ahead of Thursday ECB meeting, we will have the final quarter for 2021 GDP numbers. For the final number of the Eurozone GDP, we are not expecting any changes in a 0.3% estimates. However, even if the GDP is the most important economic figure, still with no expected surprise and focuses on the ECB and war, it is not expected to make any changes in the market. With the current situation, euro is still expected to remain under pressure. Number 4. ECB monetary policy meeting. As I mentioned earlier, central banks will have very important decision to make. We have almost the same situation as the February meeting with a bit more risk in the economic improvement. In a February meeting, Ms. Lagarde expressed that inflation risks are increasing faster and had unexpectedly hawkish tone in her speech. And now we have the increasing market risk that can slow down the economic improvement. Therefore, wait and see policy is the most expected decision by holding the current interest rates. This expected policy should be a bit positive for the European stock markets. Number 5. US inflation numbers. Inflation is increasing and it is expected to be seen in higher levels for the February numbers, while with ongoing tensions and increasing raw materials and energy prices, it must see an increase even more in the following months. The consumer price index is expected to increase by 0.8% and 0.5% for the headline and core numbers. These numbers will be important and more important for the next week's Federal Reserve meeting. At the same time, the reflection of inflation numbers will depend on geopolitical tensions. If tensions increase, the market will have less reaction to the inflation numbers, while if peace talks can end this war, then economic data will have more and real effects in the market. Therefore, higher inflation will be negative for the stock markets and vice versa. Number 6. Canadian employment data. Last week, Bank of Canada didn't surprise the market with 0.25% rate hike. And now, employment numbers will be in the spotlight. In January, with more restrictions that we had because of COVID-19 cases, employment numbers were weaker than expected. But for February, we are expecting to see unemployment rate again to fall to 6.2%. And it must be positive for the Canadian dollar. Thanks for being with us and hope this week is going to be an amazing week for you.